new structure low, outside return, new structure low, outside return, new structure low, and so on. And I'm getting a lot of questions right now about, well, how do I determine where the starting point is at? That's going to be on, when we teach trading, we teach you to use two different time frames, a higher time frame and a trading time frame. Whenever you're doing analysis on a chart, you want to make sure you're doing it on your trading time frame. Your trading time frame, and that can be whatever you choose. If you're a day trader, it could be the 5-minute charts. It could be the 15-minute charts. If you're more of a swing trader, that can be 4-hour. It could be the 60-minute charts.
It's for the purposes of our conversation, when you're learning to read the structure, it doesn't matter at all where you start. And literally, you can start anywhere on the chart. Just pick a point, pick a low point or a high point, and then start start drawing in. For that purpose, we start talking about trading time frame versus higher time frame, and that type of stuff is really one level deeper. And for the purposes of this conversation, the important thing is that you're recognizing that ebb and flow.
The most important thing is, because you're really just going to confuse yourself if you're getting too deep into it right now. And I got to remember that a lot of you guys in here are first timers. A lot of you in here are new, so I want to keep it as simple as possible. But the important part, as Jason mentioned, is you want to recognize the pattern. You want to be able to have your eyes recognize the pattern of new structure lows, outside returns, new structure lows, outside return, new structure lows. That's the pattern. Now, going one step further, and actually before we're going to talk about structure, let's go into how can we tell we have a new structure low, and that's going to take us to the higher high, higher close principle, or lower low, lower close principle. We talked about the market moving, right? So we have our initial starting point down here. We have our initial structure high. We then get our outside return. And as the market approaches our initial structure high, this is going to be that key decision point. And the question is, how do I know when we get or when we make a new structure high? Is it when the wick of the candle passes it? Is it when it closes? Is it after a retracement? And an easy way to identify this is the higher high, higher close principle. So if you have your paper and pen out, you want to write this down. We have a valid new structure high when price action creates a higher high, higher close. So imagine market's pushing up. I'm going to try my best to draw a candle here. This is our candle that's pushing up to test our initial structure high. In order for us to have a valid new structure high, the close of this candle has to be above the high point of our initial structure high. Again, I repeat, the close of this candle has to close above the high point of our initial structure high. Yeah, that's going to be better on an actual chart than trying to draw it in. Oh, is it loaded up, or can I? Yeah, if you. That'll be a lot easier than trying to draw it on.
We have a slideshow for this.
What?
There we go.
There, look at that.
Oh, snap.
There we go. So this should be. Can you guys see the slideshow? This should be a lot clearer than me trying to draw it on for myself. Now, it's not the wick. Soon, I want to make sure that makes sense because it's very crucial you guys understand this. And if you can't see the slideshow, you'll just have to, again, watch the recording and wait till we come back to an actual price chart. Clear. All right. So let's go back to a price chart.